Greetings everyone, I bring a new video where I start the second part of the trade with alpha indicators in the financial markets based on price action. Remember, price action can be interpreted in various ways, such as true balance order blocks, liquidity on stop loss points which can be seen graphically, or with indicators or over the pages. It can also be identified with candlestick patterns during absorption phases. On a rejection basis, whether bullish or bearish, price action can also be seen in the form of PCR based on the rejection zones. For example, if the price goes up to a zone like in the West Bear, it's rise, and falls again, and it go back up and gets rejected again. It forms a pullback pattern with 3 rejections in a zone, eventually leading to the pullback. Here are the end point with the rejection, but consider the bearish trend. This move could have been anticipated. Let's see what is unfolded during the session. Okay, the amount right here is $15 for a 3-minute expiry. I will look at different charts and enter based on the pattern I see. I've previously explained what we would do in this video. Now I'll look for an entry. To achieve this, I win an N4. Here is possible entry. The price is testing the entire area. It's rising strongly, but doesn't break through the zone, which indicators a downtrend. I will test for 3 minutes in the zone. Entry at the peak. My position is $15, and the criteria area, the price form is right. Hey, do you want to join a group where shares signals and strategies that really work? And the best part, it's completely free. Then listen up. In my free group, I share various strategies, insights, and live operations, 100% real and transparent. I will never ask you for money and won't spend anything to join, alright? Want to learn how to earn more with operations? Click the link in the description or the first pinned comment and join the group now. See you there, guys. I will cash it out if it is continue upwards. The price goes up, falls, go back up and reject again, but doesn't for a new low. The key is to ask these movements. Seeing the upward indicators a petition break, the reaction of these candles to that rejection, supported by a bearish trend. How do I identify the trends? With indicator. Let's use zigzag guides here. It shows the trend of assets in M1. Okay, click right here, right now. All right. So, it's trend of the assets in M1. We see a significant downtrend divided into several waves. If we switch to 30 seconds, you can see the waves and impulse that form the trend. I don't need many waves to interpret the trend. I just absorb the trend and decide based on the zone. Remember, zigzags help confirm or understand the price action guides entry points. The writing guide indicators a clear reaction in the zone. Even bearish in this case, I could have entered based on the price action, but it waits. A few seconds left before the trade ends. Notice the volatility in the market, the price returning to my entry point and quickly drop it. And the position won through the price action, $27. We got the first hit in volatile market, requiring great patience. If the price goes back up, I wouldn't take it because that's the bullish movement, the micro downtrends. It's indicated that the area lacks liquidity to change holdings or continue the trend. But since I won the first trade, I entered the next trade with $30. Alright? Now, I will look for a new opportunity based on the price action. Here's a possibly quick opportunity. Unfortunately, I think it's gone, but I could wait for restats. Seeing weekly forming equal lows, it could throw a weak blow. I could wait for the price to seek the lower area in the enter long daily bullish support. By candlestick pattern, there was a chance. I could wait for a pullback to the zone and enter short. I seen it to burn the pullback. Given the equal activity, I might throw less into it. Slowly enter a short position and see the price reaction. It also looks bullish. The price has a hammer pattern plus an engulfment candle. Okay, as the liquidity in the form of support, the price theoretically should break and seek bottom. That's the entry criteria. Given the volatility, I will enter there and see if it should have weighted a bit higher. Look at the candle that's informing. I'm waiting until it comes off this position. Alright? Look at this. Remember, when the market is volatile, candlestick movements can rise quickly and then fall just fast. Here you can see the rise and fall. Okay? I opened it for a short duration because theoretically in candlestick pattern, if you look at this one, it's showing as rejection. The price rise, rejects, and the next candle is strong engulfment one. Okay, look at this. That's the entry concept. Since the price was very low, I'm not entering below, but will enter both or pull back. Maybe I could have waited a bit long for better entry points, but that's okay. I'm in the zone now. Look at this. And we have to wait. Let's see the outcome. Alright? We got it right now. 50 seconds. And look, this candle just start to go down again. Just pay attention. Alright? Look at the movement of the candle. Look at the pattern, as I said for you. Okay? So let's see the outcome the next 30 seconds right now. Position 1 in Euro CAD, guys. This is our second successful trade, $56. I didn't expect this candle to act this way, but it clearly gave us a pullback. I could have entered at the various point higher. I opted for a shorter time frame, 2 minutes and 15 seconds, seeing the fast movements. This helped avoid the risk that a 3 minutes duration might flip the position due to high volatility. The trade also takes at a time some liquidity on the upside. I generally not watching the market trends, which might be a mistake. I still balance M5. There is some room to the upside. However, it might take out the liquidity here before moving up, as it's seen form bullish retracement strikes for a while. Okay, so just look at this. This is a bullish retracement. All right. I should be looking for entries aligned here, but only with confirmation. I wait to see if the price makes the movement and enter at the high points. My third entry will be with $50. Okay, so let's change this and let's get ready for the next one. All right, so now $50. It's look like the pair is approaching to the bottom points. I might take the entry based on the price action. Maybe we'll dip a bit more in the reverse. I'm still paying the order at 1.48595. Alright? The order is triggered moving to the upside. I have entered with $50 and the entry point was much better. Let's wait for the reaction. My analysis suggests that the price will dip below that stop loss level before rising. The price is providing better entry points, while the order was set in the 1.48595. I entered at lower level, which is better. I set a 3 minute duration, anticipating a shakeout to mislead lower entry before moving up. The area indicators strong momentum. It's look like an accumulation pattern with bullish. Look at this. Based on this observation, I expect the price to go up to balance, which is why I entered long. The scenario is forming a range that resembles a flag or a triangle, often seen in corrections. The price should dip and rise. Let's see how the position ends up. Okay? So let's wait. 1 minute 4 seconds remaining. Let's wait to see what's happened. A few seconds before the trade ends. And one Euro CAD, guys, position to the upside. The reaction zone, $93. It's performed well despite some volatility. It's reacted quick from here. Now for the last trade, I entered with $7. Alright, let's change this value to secure my initial amount. After a while, the price in EUR/CAD dipped, came back and moved up strongly. Such moves are dull to predict, and sometimes it's better to rest and not trade at all. The price might return to right zone and then move it up. This fall is unusual due to the sharp candle movement. I will try to capitalize on this, and we are watching 30 seconds. Okay? It might be a range of accumulation in a small time frame like 5 minutes. The price might find support in this week and go up, and there's a gap here. I still believe the price will rise. I enter bullish. Entry long for 3 minutes in EUR/CAD based on the structure and the gap. The macro trend shows the area is resisting the fall. The gap here and the macro trends theoretically leaves nothing to stop the price from rising and retracing halfway. When there's gaps, as you can see here, alright, usually 50% is mitigated. So it's just need to pay attention when you get this. Alright? So guys, let's wait 2 minutes and 45 seconds to see if this position wins. Alright? Hey, wait a minute. Before I see the results of this trade, how about competing for a 100 account to test the strategy I taught in the video? It's simple. Leave a positive comment and join my Telegram group through the link in the description. Let's make the most of it. We have just 20 seconds right here, right now. With very little time left, the direction is positive. The price moved to the middle of the zone, direction where the yellow line is. I close in this trade with volatility and end the video. Okay? Winning in the 3 minutes trade, guys. Look at this on EUR/CAD. $131 positively affect the trade. My amount is increased 171, starting from $28, achieving a profit of about 140. This is price action in the volatile market. Sometimes it's better to still wait for calm and then the trend, right? This is the second video on this thing, and there are many ways to view this. If you like the video, please like, leave comments on how you like it, and share if you tried these concepts in real trading. See you on the daily live stream. I wish you successfully trade session and happy day, and see you later, guys. Bye bye.